What if I told you that the metal sitting in your walls, your phone, and your car could be the investment opportunity of 2026? While everyone's chasing the latest cryptocurrency or tech stock, a global crisis is brewing in Chile that could send copper prices absolutely soaring. We're not talking about a 10 or 20% gain, we're talking about potential 100x returns. And here's the shocking part. Most investors have no idea this is coming. Right now, as you watch this video, workers at the Mantoverde mine in northern Chile are blocking access to critical infrastructure. Production has completely stopped. And this isn't just any mine. This is one of the world's major copper suppliers. The strike that began on January 2nd, 2026, has already sent shockwaves through global commodity markets. But this is just the beginning of a perfect storm that could make copper the most explosive investment of the decade. In the next 20 minutes, I'm going to show you exactly why copper is positioned to explode higher in 2026. We'll dive deep into the supply crisis happening right now. We'll explore the massive demand surge coming from artificial intelligence, electric vehicles, and renewable energy. And most importantly, I'll show you the exact ways you can position yourself to profit from this opportunity through stocks and exchange-traded funds. By the end of this video, you'll understand why copper might be the smartest play of 2026. So let's get started. First, let's talk about what's happening in Chile right now. Because this isn't just another labor dispute. This is a critical supply shock that could change everything. Capstone Copper Corporation's Mantoverde mine employs thousands of workers in northern Chile. On January 2nd, 2026, contract negotiations completely broke down. The workers walked off the job. And they didn't just strike. They blocked access to the desalination plant that's absolutely essential for mining operations. Now, why does this matter so much? Chile produces roughly 27% of the world's copper supply. It's the largest copper producer on the planet. When production stops at a major Chilean mine, global copper supplies immediately tighten. And here's the thing. Copper isn't like other commodities. You can't just turn production back on with the flip of a switch. Mining operations are incredibly complex. Getting workers back, restarting equipment, and ramping up production takes weeks or even months. But the Mantoverde strike is just the tip of the iceberg. Chile's copper industry has been facing challenges for years. Ore grades are declining, meaning they have to dig through more rock to get the same amount of copper. Environmental regulations are getting stricter. Water is becoming scarce in Chile's desert mining regions. And labor unions are becoming increasingly powerful and demanding better conditions and higher wages. This strike could trigger a domino effect across Chile's entire copper industry. Meanwhile, copper inventories around the world are already at critically low levels. The London Metal Exchange, which is the global benchmark for copper trading, has seen its copper stockpiles drop to multi-year lows. Exchange warehouses in China, the world's largest copper consumer, are nearly empty. When you combine historically low inventories with a major supply disruption, you create the perfect recipe for a price explosion. Now let's shift gears and talk about why copper is so incredibly important. Because if you don't understand the fundamental role copper plays in modern civilization, you won't fully grasp why this opportunity is so massive. Copper is literally everywhere in your daily life, even if you don't see it. The wiring in your home? Copper. The pipes delivering your water? Copper. Your smartphone has about 15 grams of copper inside. Your laptop has even more. Your car contains roughly 20 kilograms of copper in its electrical systems. But here's where it gets really interesting. The technologies that are reshaping our world in 2026 all have one thing in common. They're absolutely hungry for copper. An electric vehicle uses 4 times more copper than a traditional gas-powered car. 4 times! We're talking about 80 to 90 kilograms of copper per electric vehicle compared to just 20 kilograms in a conventional car. And the International Energy Agency predicts that electric vehicle sales will continue skyrocketing through the rest of the decade. Then there's renewable energy. A single wind turbine can contain up to 5 tons of copper. Solar panels need copper wiring throughout. The grid infrastructure needed to distribute all this renewable energy, it's essentially a massive copper network. As countries around the world commit to net zero emissions targets, the demand for copper in renewable energy installations is growing exponentially. And we haven't even mentioned artificial intelligence yet. The artificial intelligence boom is creating unprecedented demand for data centers. These massive facilities that power everything from ChatGPT to cloud computing are essentially copper fortresses. A single large data center can require hundreds of tons of copper for its electrical systems, cooling infrastructure, and networking equipment. Manufacturing and construction still represent the largest traditional copper markets. And here's the critical point. Unlike some commodities where we might find substitutes, copper is incredibly difficult to replace in most applications. Its unique combination of electrical conductivity, thermal conductivity, corrosion resistance, and malleability makes it irreplaceable. Let's talk numbers, because the supply-demand imbalance for copper is absolutely staggering. According to Goldman Sachs, the world will face a copper supply deficit of millions of tons annually by the end of the decade. We're talking about actual shortages, where global demand exceeds global supply by massive margins. The problem is that bringing new copper mines online takes an incredibly long time. From discovery to production, a new copper mine typically takes 10 to 15 years to develop. You need to find the deposit, do extensive drilling, secure permits, and build infrastructure. And here's the kicker. Very few major new copper discoveries have been made in recent years. Mining companies are forced to dig deeper and process lower-grade ore. Many analysts estimate that the marginal cost of production for new copper projects is approaching or exceeding $4 per pound. And here's what makes 2026 so special. This is the year where the supply-demand imbalance becomes impossible to ignore. The Chilean strike is forcing the market to wake up. This perfect storm of constrained supply and surging demand is why copper prices could absolutely explode. Now, let's look at copper's price performance. During the China commodity boom of the 2000s, copper prices increased more than five-fold. Today's demand drivers are global and structural. Some analysts are projecting copper could reach $6, $7, or even $8 per pound. So how exactly can you position yourself to profit from the copper explosion? Let me break down the three main ways investors can gain exposure to copper in 2026. Each approach has different risk and reward characteristics. The first option is copper mining stocks. When copper prices rise, mining companies benefit from operational leverage. A 20% increase in copper prices might translate to a 50 or even 100% increase in profits for an efficient mining company. Major copper producers include companies like Freeport-McMoRan and Southern Copper Corporation. These are established companies with operating mines and strong balance sheets. They offer relatively lower risk but solid leverage to rising prices. Then there are junior mining companies. These are smaller, higher-risk companies exploring for new deposits. The potential returns here can be astronomical, 10-fold or 20-fold, but the risks are equally substantial. Many end up worthless. The second major option is copper ETFs, like the Global X Copper Miners ETF, which offer diversification. The third option for advanced traders involves copper futures and options. These allow for significant leverage but carry the risk of total loss. Let me share some specific investment ideas for 2026. For conservative investors, Freeport-McMoRan is often the go-to. Southern Copper is attractive for its low production costs and dividends. For broad exposure, the Global X Copper Miners ETF is a solid choice. Now let's address the risks, because no investment is without downsides. Copper prices can be volatile. A global recession could hurt demand. Technological disruption or new substitutes could emerge. And mining operations face labor, environmental, and political risks. Despite these risks, the fundamental thesis for copper remains incredibly compelling. The supply-demand imbalance is real. The megatrends of EVs, AI, and green energy are accelerating, and new supply simply cannot come online fast enough. The copper opportunity of 2026 could be one of the most significant commodity trades of the decade. If you found this analysis valuable, make sure to like and subscribe. Leave a comment below with your thoughts on copper. Thanks for watching, and I'll see you in the next video.